Hi, I'm Wayne Wagner, and this is Market Vision. Today I want to speak about inflation. There's a lot of anxiety about the recent inflation numbers coming out of the month of April, month of May, that kind of thing, and the year-over-year comparisons have been pretty stark. I want to speak to the idea and offer some hope that we don't think this is a systemic, spiraling out of control issue, and it's because of a number of things. First of all, the year-over-year comparisons are very, very important with inflation, just as with everything else. You'll remember a couple of months ago, I told you if you want something to feel really good about, go look at the equity performance of your portfolio because your equities were probably up 50 or 60%. Well, if you go back today and look at the trailing 12 months, comparisons are disappointing because you're only up 25 to 35% year over year. So that time value of the measurements of year over year performance in equities, year over year performance in inflation is really, really important. And if you'll recall, this point last year, in the middle of the worst of COVID, prices were falling because businesses were closing down. And the cost of goods was actually dropping because people were trying to clear the shelves and we didn't know where the end was. So we had really low inflation numbers. Now we've gotten some inflation numbers, so the year-over-year comparison feels like inflation is running away to the high side. That's being accelerated really by three things. The first is raw materials production. Raw materials producers of all kinds, logging companies, iron ore, steel companies, those kinds of things, they've been doing this raw material production through good times and bad in the economy for 150 or 200 years. So they know that when a crisis hits, it usually takes about 3 to 5 years for the organic demand to get back on trend. They were wrong this time. We're back to organic trend demand within 15 months. The economy has come roaring back, and so they take resources and development offline very quickly. It takes them a long time to get production back ramped up to pre-COVID levels at this stage. Pre-event or crisis levels in the past. It takes them a long time. And so that's cause for some of the supply chain delays that we have seen. That also has bled over into the ports. Now, if you've tried to get on a plane lately, if you've tried to, hopefully you're living in a state that's started to open up now, but all of the COVID restrictions, how do we open up restaurants? How do we open up Costco? How do we open up airplane, hotels, travel, all of the other things in our economy? Now, take all of that and give it an awful lot of opioids, and you get the crisis in the ports, because the ports that literally have ships from all over the world with all the manufactured products, and they have to figure out how to be COVID compliant with hundreds of ships, tens of thousands of shipping containers on a daily basis. And so it's no wonder there has been a real pinch point in just trying to figure out the COVID protocols and moving into a post-COVID world. How do those ports keep us COVID safe? Right, so those have been a pinch point. So raw materials, the pinch point in the ports, and the last thing I'll point out here is this robust demand that I mentioned. We're going to talk about this in another video, but we are back to pre-COVID GDP growth within 15 months, almost unprecedented, and certainly something that none of us saw happening 6 months or 12 months ago. So that's fantastic for the economy, it's fantastic for the stock market, but it also creates those inflationary pressures that we're seeing. Don't let one or two numbers distract you or scare you. If you have questions, as always, give us a call here at Visionary Wealth Management. We're always here with perspective for the decisions ahead. I hope this has been helpful. If it has, pass it on or tag a friend. Have a great day.